The second longest bull market in stocks was brutally interrupted in early February of 2018 with some serious volatility, including the largest single-day point drop in the history of the Dow Jones Industrial Average. Why would something like that happen in the economy if the economy is otherwise doing so well? Investors are so clearly exuberant, unemployment is so very low, and the Federal Reserve, Treasury, and President Trump are guiding things along so firmly, tongue firmly in cheek. When actual economic fundamentals are weighed with some data sobriety, this recent volatility could be seen as a warning of further corrections and a deep recession to come. Yet that said, such a wider downturn isn't necessarily due to quote-unquote natural market forces. Just like the disingenuously long 9-year-old bull market in equities itself hasn't been due purely to theoretical supply and demand either. So what all is going on behind the ticker tape? What are the true stakes, real numbers at play, and possible ends for which another large systematic financial crisis could serve as means to? In this episode of Money and Fear, and in this show's show notes below the video, we'll look at the interplay between the bond and stock markets, probe possible financial shenanigans meant to speed a wider correction along, and bring some monetary history into it all as well, as always. Details not shared, let alone analyzed, by mainstream corporate business press and its sponsors, all of whom prefer that you not think critically about economics or finance, but rather just listen to prescribed numbers, guidance, and quote-unquote sound advice otherwise. If you're not a NewsBud member yet, please join and tell others. It costs practically nothing, yet gives you information you're not supposed to know, thus empowering you to stay ahead of the herd and think like the establishment planners think.